Welcome to the Red Cloud Research Roundup, hosted by Red Cloud Financial Services. It is July 15th. Canadian-based companies ATHA Energy, Skyharbour Resources, and Canalaska Uranium have been busy as they all recently released drill results at their respective uranium discovery projects. Managing Director and Head of Equity Research David Talbot is here to provide details on the news. Rounding out the episode, Alina Islam, Mining Analyst, recounts her recent site visit with Ucore Rare Metals and her thoughts on early work of a proprietary new technology. So with that, David, over to you.
Thank you for that introduction. I'm David Talbot, Managing Director and Head of Research here at Red Cloud, and I'm pleased to join you today as part of an ongoing series of discussions with the Red Cloud research team. And Alina and I would like to speak about several names this week. Alina will speak about Ucore following our visit to its demonstration plant in Kingston, and I will speak to three of our favorite explorers that each have some very interesting, if not important, news over the past week, specifically Canalaska, Skyharbour, and ATHA Energy. Now, all three companies are investment banking clients of Red Cloud, and I've been to each of these companies' main project sites. Now, before I get to the stocks, there were a couple of news items that helped kick off a rally in the uranium sector. First, Biden signed the ADVANCE Act. This is a new bill designed to boost nuclear reactor deployment in the U.S. It should help speed up licensing of new reactors and nuclear fuels by increasing Nuclear Regulatory Commission funding and lowering fees to help expedite permitting processes. Resources will be thrown behind the microreactor industry as well. The program will also look at turning a lot of coal plants into potential nuclear power plants. And many new reactor designs will require high-assay, low-enriched uranium, also known as HALEU. The program is designed to help strengthen the nuclear fuel supply chain, specifically the U.S. ability to enrich uranium. And these efforts should help strengthen the U.S. nuclear industry. And a strong nuclear industry will support the U.S. uranium industry, without the need for any direct intervention by the federal government. Secondly, news out of Kazakhstan last week probably had as much or more impact on the uranium stocks. Kazakhstan has increased its mineral extraction tax for uranium. It had already increased to 6% in 2023, but now will rise to 9% in 2025, and then from 2026 onward, Kazakhstan will introduce a tiered tax structure linked to annual production and uranium prices. Only 2.5% of the tax is tied to uranium prices, capping out at about $110 a pound US. This isn't anything new. Saskatchewan has tiered pricing related to uranium prices and company profits. It makes sense that if uranium prices go up, taxes can rise to take advantage of that too. However, in Kazakhstan, the tax could be as high as 20.5%, with 18% of that linked to production. We could see tax hikes as projects increase production beyond various thresholds, including 1.3 million pounds, 2.6, 5.2, 7.8, and finally 10.4 million pounds, with the largest mines paying more in tax. Now, this move could likely discourage producers like Kazatomprom, the world's largest uranium producer, to increase its production. This move comes as a bit of a surprise to the market as well, and the result could be less uranium mine supply. Now, we do expect that future Kazakh production is largely going east into Russia or China. But for now, Kazakhstan is a real option to supply European or US nuclear utilities to help wean off Russian uranium supplies. Those supplies will be halted going forward into the US, with some exceptions, at least until 2028, where there will be zero deliveries coming from Russia. This increased tax, and its implications on large Kazakh producers, specifically Kazatomprom, could cause uncertainty in the increasing tightening uranium market. And we might see upwards pressure on prices in years to come. So, how do we start to take advantage of potentially higher uranium prices and a stock market that seems to be heating up very quickly? Let's start with Canalaska Uranium. We recommend the stock with a speculative buy and no target price. Canalaska continues to hit on its very high-grade Pike Zone discovery on its West McArthur JV property, a site that we recently visited in the eastern Athabasca Basin. We have spoken about this name on numerous occasions, so I'm not going to say too much here, but results continue to impress. And this might very well be the next ultra high grade uranium discovery in the basin. Further very positive drill results were provided last week, and the stock rose almost 20% over the next 4 trading sessions. Remember, to date, drilling has only been across the width of what we expect to be a cigar-shaped unconformity deposit. So while we've seen several high-grade hits since the unconformity discovery was made in February, drilling continues to test just likely will be the short direction of the deposit. We do look forward to the drills stepping out laterally along strike to see how big this deposit really might become. Meanwhile, hole 7 intersected the Pike Zone behind holes 6 and 4, and as I said, extending the width of the zone at the unconformity. Results included 3.44% U3O8 over 21.6 meters, so this is the widest intersection to date. And this intercept included a higher grade portion grading 10.9% over 5.4 meters. I mentioned holes 6 and 4 also drilled on the same section. They had previously returned 15% over 9.6 meters and 10% over 14.5 meters, respectively. Geology of this new hole is like those drilled previously and typical of unconformity deposits. We are seeing massive uranium, alteration that extends well into the overlying sandstones and to the basement, and multimeter scale faults and clay breccias. Hole 7 is just the first hole of the summer drill program, so there should be a lot more news to come on Canalaska. We do believe the Pike Zone discovery will grow incrementally as drilling continues. Next up, I'd like to discuss Skyharbour Resources. We recommend the stock with a speculative buy rating and a 65-cent share price target. Skyharbour had a couple of important press releases last week, and again we saw this stock rise almost 20% in the next few trading sessions. First, it announced that it had discovered uranium at the newly identified Fork Zone on the Russell Lake property in the Athabasca Basin. Later in the week, it provided results for its Maverick Main Zone deposit at Moore Lake. Drilling returned some of the best hits to date there, and all 6 holes intersected mineralization. But let's focus on the Fork Zone discovery first. Initial Phase 1 winter drilling totaled 6 holes for a little over 3,000 meters. The best intercept included 0.72% over 2.5 meters, including 2.99% over half a meter at 338 meters depth in hole 2. Phase 2 saw another 4 holes, a little over 2,000 meters, with those assays still pending. Uranium mineralization is open in most directions, including along strike, and that will be the focus of summer drilling coming up. The recently identified Fork target is about 1 kilometer southwest of Skyharbour's central Grayling target and about 4 kilometers south of Denison's ultra-high-grade Phoenix unconformity deposit. It is only recently that geophysics was able to pick up this target given the interference by nearby power lines. This is the first intercept of multi-percent high-grade sandstone-hosted uranium on the property. We expect another 4,500 to 5,000 meters of drilling this summer being planned for Russell Lake. We believe this news was very important for Skyharbour, and now it provides a legitimate uranium discovery on a second project for the company. Later in the week, Skyharbour did report drill results from its flagship Moore Lake project. It intersected 4.6% over 5 meters, including 7.3% over 3 meters, which included 10.2% over 1 meter. All 7 holes, for about 2,200 meters total, drilled into the Maverick Main Zone intersected significant mineralization, with the goal of further expanding and delineating this existing zone. This hole, it was one of the better holes drilled to date and may help elevate average grades. Hole 3 also intersected a broad interval of high-grade uranium mineralization, including 1.1% over 11 meters, which also included 5.9% over 2 meters. Other holes hit the same geology, grades, and thicknesses typical of the Maverick Main Zone, ranging up to about 0.9% over 6.5 meters. There is still plenty of upside along this largely untested 4.7 kilometer trend. While most Moore Lake project drilling has been focused on the main Maverick and the Maverick East zones, minor drilling has taken place elsewhere on the property's 18 plus conductive areas. Like at Russell Lake, there are plans to drill here this summer, with about 2,500 to 3,000 meters planned for Moore Lake. It's always a pleasure to see drill results that are amongst the best ever seen on the property, but I would consider much of this drilling to be infill, and I'd love to see Skyharbour get more aggressive on the property-wide recon drilling here. My final topic for today is ATHA Energy Corp. We do not rate this stock. Results from the first 6 holes for about 3,000 meters from its Anglac project, and none of it was provided. There was a 100% hit rate outside of the existing 43.3 million pound historic resource area. This is a high-grade deposit for outside the Athabasca Basin with an average grade of 0.7% uranium. Drilling expanded the footprints of the main zone, eastern extension, J4, and Ray zones. While assays are pending, strong radioactivity suggests we should see continued high-grade uranium, perhaps even in the multi-percent range locally. Hole 175 intersected uranium about 80 meters along strike to the west of the LAC 50 main zone. It returned an average of about 1,700 counts per second over 9.5 meters at about 75 meters depth, and the peak was about 22,000 counts per second. 4 additional intervals from this hole also returned elevated radioactivity, and another hole was drilled to a depth of 600 meters to test stratigraphy and structures at depth. All holes targeted parallel tuff horizons that were previously identified by latitude uranium. So for non-geologists, think volcanic ash that's deposited close to the volcanic source. At the main zone and the Ray zone, shallow uranium was intersected within these new tuff horizons. So these shallow, high-grade intersections do support management's thesis that the LAC 50 trend hosts a stacked lens system similar to basement-hosted deposits in the Athabasca Basin. So we've got a couple things for you to note here. First of all, ATHA is approaching exploration differently than previous owners. Anglac, already boasting 43 million pounds, has the goal to scale up and help maximize project economics, given that this project is remote in Nunavut. And while management hasn't really stated a deposit target size, we wouldn't be surprised if approaching 90 to 100 million pounds would be desired. Thus, drilling is taking much bigger step outs than in the past. Also, geological ideas are changing. The LAC 50 deposit main zone extends for about 1.5 kilometers strike to a depth of 340 meters, with historical resources confined to a single lens. Now, Latitude, a prior company, identified extensive mineralization outside the resource area. And current interpretation and modeling by ATHA now suggests this system is part of a series stacked lenses of associated tuff horizons, much like we said before. Targeting this series of tuff horizons has helped pinpoint uranium mineralization. And with this understanding, we believe ATHA should be able to make wider step outs without reducing chances of hitting uranium. If anything, this new understanding on the controls of mineralization should really help increase chances not only to expand the zones, but also to discover new zones on the various parallel tuff horizons or at depth. Finally, management is now comparing Anglac to basement-hosted deposits in the Athabasca, such as Cameco's Eagle Point mine. And this is rather than Beaver Lodge deposits that are structurally hosted vein deposits. We are seeing an increased importance of stratigraphy in relation to mineralization. Yes, this deposit is still structurally hosted, but mineralization occurs within brittle faults within the various tuff horizons. So we expect this to be a busy summer. Expect another 7,000 meters of drilling, and then Phase 2 geophysics and ground geochemistry to begin in August. The objective of Phase 2 is to identify high priority targets for future drilling. So that's all for me this week. Over to you, Alina.
Thanks, Dave. Hi, everyone. I just wanted to speak to you about our recent visit to Ucore Rare Metals, to their demonstration plant in Kingston, Ontario. This is a not rated stock, and I will note that Ucore is not a banking client. So a few weeks ago, we had the opportunity to visit their facility, which has been testing its patent-pending rare earth element separation technology since December. We were very impressed with the company's progress to date, as they have successfully separated heavy rare earth elements from light rare earth elements, but they still need to demonstrate that they can separate individual elements from source material. So we did publish a report on our visit last week, which can be found on our research portal, but I just wanted to highlight a couple of takeaways for our listeners. First, Ucore's innovative technology comes into play early on in the solvent extraction process, when the aqueous and organic solutions are mixed for further processing. In conventional SX processes, this mixing takes place in large, bulky units called mixer-settler units and could take up to weeks. But Ucore has developed column technology where the aqueous and organic solutions are mixed without the use of a traditional mixer-settler. So this is an energy-efficient and quick process that can be up to 7 times faster, and it uses 70% less floor space compared to traditional mixer-settler units. Second, their technology is feedstock agnostic. It has been tested on 3 different types of material to date and has shown that no modifications are required to process material from the different sources. Third, their technology is modular and scalable. They are running 80 tons per annum at the demo plant in Kingston at the moment, and if the technology is proven, the plan is to scale this up to 2,500 tons per annum at its production facility in Louisiana. Estimated capital for the Phase 1 2,500 ton per annum plant is about $60 million US, and the plan is to fund a third from government sources, a third from offtake agreements, and the rest with debt and equity. So eventually, they would like to scale the Louisiana facility to get to up to 7,500 tons per annum of rare earth oxide production. But just speaking of government sources of funding, they are already running a pilot for the U.S. Department of Defense, where the Department of Defense has awarded them $4 million. And this is to demonstrate 2 things. First, that the technology is more efficient than conventional solvent extraction techniques. And 2, that it can separate both light and heavy rare earth elements. So once the pilot for the DoD is complete, they will run a similar pilot for Natural Resources Canada, which will give them an additional 4.3 million Canadian dollars. The objective with the NRCan program is to show that they can separate light rare earths, specifically NdPr. So overall, we think Ucore still has a lot more work to do here. If they are able to demonstrate scale, their technology can lower both capital and operating costs for rare earth element processing facilities. The goal is to establish the first heavy rare earth separation facility in North America by 2025. I'll note that currently there is only one operating separation facility in North America, and that is Energy Fuels White Mesa Mill. However, they are only separating light rare earth elements, NdPr. And that's it for me. Thanks for tuning in.
Thanks for listening to the Red Cloud Research Roundup podcast. We hope you enjoyed this dive into recent notable mining news. Remember, you can join us every Monday for new episodes, and as always, you can head over to redcloudsecurities.com to read all our research reports discussed, for all Red Cloud Securities free research reports, and to sign up to our email list. That's it for this episode, and see you next time.